wondered why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? M Plus Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz.
Okay, all right. Okay, good afternoon, everyone. Okay, sorry. Just now I forgot to unmute my mic. Really sorry about that. Okay, good afternoon. This is Elki here from M Plus Online with you guys today. Okay, on this wonderful Monday. Okay, all right. Okay. Before I start, I really want to do a very fast voice check. Okay, if you guys can hear me, okay, please just type clear. Okay, if you can hear me clearly, type clear under the comment. Okay, then we shall start with our section for today. Okay, this is our weekly market outlook section. Where we will be sharing with you the expectation and also some of the important events that we are expecting to happen uh in this week. All right. Okay. Thank you very much, Erin. Okay. So the voice is clear. Then we shall start proceed with our section for today. Okay, so if we look at the market today, okay, if we look at the market today, we can see for our FPM KSA today, it started a bit strong. Okay, with some buying interest in the morning. Okay, despite that, last week, if we look at what happened last week, US last week the regional sentiment is more towards the global sentiment actually is more towards bearish, skewed toward bearish, with Dow Jones, S&P, and also Nasdaq both down 3% or even more. Right. Okay. We are also seeing the volatile index to be increasing, with more expectation that this market is going into a more volatile mood. And what we are expecting for this week is we will expect that a similar situation will prolong, as at this moment we do not see a very clear or a very strong and bullish catalyst that supporting and turn the situation around. Right. If we look at today our local FPM KSA, okay, our local FPM KSA, the blue chips index, we can see that since the selling on the 5th of May, okay, since the rejection from 1615 levels on our FPM KSA, we can see that although the blue chips index has come to the support level of 1550, okay, we do not see any strong buying or strong rebound from this area. In fact, what we are seeing right here is actually a pennant, okay, a pennant. And what does a pennant mean? Okay, a pennant technical chart pattern right over here is telling us that this is a potential bearish continuation that gonna happen. Okay, if based on the reading of a pennant, if we look for one-to-one movement, okay, from 1650 all the way down to 1547, okay, if we're gonna see a one-to-one movement downwards wise from the high at 1560, we might see our local benchmark index will be trying to penetrate below 1500 levels. Okay, so in other words, we what do we say is our local benchmark index, the drop might not over yet at this moment. Okay, hence for those who are looking into strategy, how to trade, or even a mid-term to longer term investing strategy, at this moment, if you want to do some bargain hunting, you might want to do maybe like 30% or 50% only, rather than into going full size at this period of time, because the downside, it remains there, despite that we are seeing some buying support at 1540 areas for our FBM KLCI. All right. So if we look into our the performance for today, we can see that actually we are kicking start with a little bit good volume. For today, for the morning on this Monday, we are seeing it has already reached 2.27 billion. Okay, and most of the volume, they actually came from, if we look into the volume, they actually came from Sapura and also Serber Dynamic. Okay, which Serber Dynamic has been trading actively since the rebound from around 6 cents all the way to 22 cents, and we has experienced a selling down last week. Okay, and today we are seeing the further selling pressure to 11 cents. Okay, on another hand, Sapura side wise, there are ongoing rumors that the government will bail out the company. Okay, hence the speculation and also the trading interest has been coming into Sapura Energy. Okay, we can see as for today, the highest price as one at 10 cents is near to the highest almost in a year. Okay, so if we look into Sapura Energy, the charts, we can see this is a strong buy interest happening on the 17th May from 4.5 cents all the way to to close at 7.5 cents, and today is the flag breakout happening today. Okay, right. Okay, so if we are talking about one to one one-to-one target for this supply energy wise, then it could be somewhere around the technical target. It could be somewhere around 11.5 cents, 11 cents to 11.5 cents. Okay, which just come in line with the resistance at this area. Okay, yeah, at this area, coming into the resistance into this area. Okay, however, okay, knowing that the move is on speculation on the rumors. Okay, so this actually gives us a very high risk and high reward position. Okay, so um do be aware of that, and also make your decision wisely before you decided to engage the with this counter. Okay, despite of the high volume, if we look into the value wise, we can see the value remains at 856 million, which telling us that on average traded volume, if we use the calculator, okay, if we use 856 divide by 2237, the average trade transacted is only at 38 cents, which is at very penny. Okay, we can see the movement, the volume has been contributed from the penny stocks itself, and the big cap, okay, larger cap companies, they aren't trading that actively. Okay, in fact, if we look at top gainers and also decliners, we are seeing the decliners are more, which telling us that despite that we are seeing more volume, and also the FBM KLCI index is in green, the buying interest is not actually as strong as what we are expecting. Okay, hence we can say that the sentiment remains at a very cautious mood, and also many mid to longer term investor, they are still staying on sideline, amid that they are trying to find where is the direction of the market. All right, okay, so if we look into some of the indexes that are moving today, we can see energy and healthcare are the two that really performing. Okay, especially the healthcare, which has been quiet for some time. Today we can see quite a number of all these glove counters, they have been rebounding. For example, like one of them are like Hataliga. Okay, if we look into the 30-minute chart, we can see there is a spike on the Hataliga since the open gap up and continue pressure higher and cap at 4 ringgit 37 cents. Okay, so if you are using technical chart and put a 200 MA line right over here, you can see it's just well resisted and kept at the 200 MA line. Okay, for Hataliga. Okay, if we look at top glove wise, we are also seeing the rebound in the top glove. Okay, and only if top glove able to re-break above 1 ringgit 53 cents, then we might see the buying pressure towards 1 ringgit 58 to 1 ringgit 60 cents. Okay, however, for those who are trading on the glove counters today, you have to be aware that this could be a knee-jerk reactions towards the monkeypox that has been this hotly discussed and sharing in the global platform. Okay. However, if we look into some of the reports about this monkeypox, they are not as contagious and not that easily spreadable as like COVID. Okay. So with that in mind, and also monkeypox is not as deadly. Okay, and I even come across some articles, they mention about some of our existing vaccines able to be effective towards the monkeypox. Okay, so the impact from this monkeypox that is happening towards the glove counters, it should be a temporary effect, a knee-jerk reaction. Okay, so hence for those who are trading short term on the glove counters, you might want to take your profits faster. Okay, if you see good money, okay, you might want to remain it in a short-term trading behavior. Okay, but no doubt if we look into the daily charts in a bigger time frame chart, we can see that like for example, top glove has been forming a bullish engulfing. Okay, bullish engulfing on the MACD, which telling us despite that the price on the share price has been forming a lower low, but the MACD has been forming a higher low, which telling us the selling patterns has been weak for Top Glove. Okay, similarly on Hard Guard, we should see the same as well. Okay, it's hitting the support and the rebound coming in, and meanwhile we are seeing the momentum is picking up on the MACD. Okay, so on the technical view, from the technical side of view, we can see that the chances of this to have a bottom rebound kind of formation is pretty high. Okay, the probability is there, and with this catalyst from the monkeypox, it might create a good scenario, a good foundation for some of these glove counters to rebound and make a short-term upward swing. All right. Okay. But as mentioned, because the impact from the monkeypox is likely to be minimal. Okay. So this rebound is likely to be a technical rebound, and also it could be attracting some of the funds coming into the defensive sectors. Okay. Especially after it has been dropping for so much. Okay. It has been dropping all the way down. If we look from the top, it has been down about 80% from the top, and also with the flattening of the selling pressure. This is a good scenario for a bottoming rebound catch. Okay, yeah. So for those who are trading on glove counters, yes, the rebound could remain, but if whenever it comes to resistance, you might really want to take some of your position, okay, take some of your profits, and look for another opportunity, maybe a lower price to like buy in if there's any buying support or what. Okay, yeah. So if we look into other counters, okay, if we look into energy, okay, you can see energy sector continue pressure higher today. Okay, if we look into some of the, if we look into the top gainers, okay, we can see that like for example Yinsen Petroleum has and Hengyuan has been contributed towards the movement on the energy sector. Okay, I believe many of you guys who are actively trading, you guys might be aware that Petron M and also Hengyuan has been moving up really strong for the past few weeks. Okay, and one of the reason that's been widely discussed among the circle is due to the higher crack spread that we are seeing. Okay, so if we look at the crack spread has reached the high in multiple year. Okay, basically the crack spread itself, it tells us the the higher the crack spread it is, and it tells us the refiners will get a better profit margin. Okay, so with the rally in the crack spread, we are seeing Hingyuan and also Petron M has been making a very good rally. So then the next questions: is it a good timing for us to go back and buy the counter right now when it's already up about more than 50% from the low part? Okay, by the end of April. Okay, so I believe that is one question that many who wish to know. Okay, and maybe some of you guys that sitting in front of the computer, you guys that watching you guys also has been wondering these questions. Okay, we know that the chances of all these refiners, they will have a good profit margin in their coming earnings. Okay, but if we look into the crack spread, okay, if we look into the crack spread, the rally and the pickup, it actually just started in the April and also by April and May. Okay, so if we are looking into the QR, the quarterly earnings that the quarter result that it gonna release for this quarter, for this quarterly result, it might not be impressive as everyone is expecting. So that actually could create some of the profit taking and also some selling pressure to come in. Okay, So what we are seeing is, personally, I would prefer to see if the price has stabilized above 6 ringgit 35 cents to 6 ringgit 40 cents area. Okay, that is the place where I think uh, it's good to look into some accumulations. Okay, look for any sign of accumulation, and if any rebound from this area, it will be I will be tempted to go in and say it might be a good chance to make a buy call. Okay, and of course, buying over here, it also limits my stop loss to somewhere around just right below 5 ringgit 90 cents. Limit my stop loss around only 6 to 8%. Okay, and from around 6 ringgit 40 cents area, even it retest the high of 7 ringgit 50 cents. That also give me quite a good risk and reward of 2 to 1. Okay, two times reward and one times of the risk. All right, especially I will be really prepared for this one when it comes to the next QR. Okay, where we see the crack spread is picking up in by end of April or beginning of May, which tell us that the chances of the next quarterly result to be good is pretty high over there. Okay, so that is what I'm expecting on the Heng Yuan. Okay, okay, and similarly on Petron M wise, we also seeing the buying interest to be slowing down. Okay, is hovering inside the tails, the upper tails right over here. Hence, we might seeing some sideways movement and profit taking. Right, that's why for these two counters, I would say that if you're really afraid that you're gonna miss out, okay, it's normal to have fear of missing out. Just do it small and accumulate the share slowly. Okay, especially if it retrace lower to the support that we were talking about just now. Okay, as for Petron M wise, the support levels that we are looking about is somewhere around 6 ringgit 28 cents to 6 ringgit 70 cents area. Okay, I would prefer it will be somewhere around 6 ringgit 28 cents 30 cents area. Okay, yeah, to 6 ringgit 70 cents. Okay, so just do it small and slowly so that you commit to it, you get the hang of it, and then you build the position slowly. And of course, you need to know that this is a medium term positioning where you need to pick up the shares and also plan it accordingly. Right. So for the energy parts, if we another one that we saw just now, which is Inson, we are seeing Inson had a double bottom rebound from 2 ringgit 24 cents, and it has been rebounded above the midpoint of 2 ringgit 58 cents. Okay, with this double bottom rebound, we might see Inson to rebound all the way back to 3 ringgit area. Okay, or a lower resistance area will be around 2 ringgit 88 cents. Okay, but please bear in mind that it has the right issue coming up. Okay, so upon the right issue X date, we will see, which is on the 26th, we will see the price adjusted, and it might be a different type of movement. Okay, where when the right issue take place. Okay, so for instance wise, you might really want to take note that there are a right issue on the 26th. Okay, so as for the energy, I believe many of you guys also have been looking at hibiscus. Okay, hibiscus, what we are seeing on hibiscus right now is we see a very solid breakout above 1 ringgit 35 cents, which is the a very significant resistance level for hibiscus, and the price has been staying above. Okay, so with the trend remain positive for hibiscus, especially right now is forming a pennant over here. It stands a good chance that we might see hibiscus continue to pressure higher towards the next resistance at, it could be 1 ringgit 59 cents to 1 ringgit 65 cents in a short-term trading basis. Okay, for hibiscus. All right. Okay. So if we look at into some of our daily pick food today, okay, I believe one of the things that we can see across the newspaper, they are talking about two things. One is the rising of the living cost, the food cost, all this, and the second thing will be the weakening of the ringgit. Okay, so talking about the weakening of the ringgit, we are seeing we have Hevia and also Evergreen being put into our daily pick for today, whereby for Hevia wise, we are seeing Hevia has broken above the support area. Okay, it has formed a bottom at 41 cents to 51 cents area, and we have recently seen the breakouts in April and recently pulled back and supported at this area. So with this formation, we are expecting that Hevia stands a good chance to form into a continuation upwards move all the way to 72, around 72 resistance area. Okay. Uh, and first area that we are looking at is if it able to rebreak the 60 cents area, we should see a much further upside for Hevia. And of course, the share price have to support around have to be supported above 50 cents area. Okay, from here. Okay, so for those who wish to do some positioning, this I would say that this is a sweet spot to accumulate some of the counters, but for short-term traders, it would be at the breakout of 59 to 60 cents with good risk and reward ratio as well. Okay, another one will be Evergreen. Okay, Evergreen on the daily chart itself, we can see Evergreen has been trending up strongly. Okay, has been moving on an uptrend. And if we take a Fibonacci retracement happening over here, we can see it has been supported around the 61.8% area over here. Okay, and some buying has been coming in. Okay, yeah. So the retracement has done on Evergreen, and what we are looking over here is a more solid rebound. Okay, preferably above 72 cents. Then it is likely we will see it to retest 80 cents area, and potentially to rally higher to 91 cents resistance. Okay, 91 cents resistance around about here. Okay, yeah. So why these two counters is because give amid the weakening of the ringgit. Okay, amid of the weakening of the ringgit, what we are seeing is some of the export related counters, like especially like the furnitures, like the semiconductors, glove, they will benefit from their product and also uh sales revenue from outside Malaysia. Okay, especially for those who are exporting to US sites or even the Europe. Okay, so amid a weak ringgit condition, they will have um, extra gain from the foreign exchange. Hence, the potential of they reporting a better result on the next quarter, it will the chances are high. Okay, so Evergreen and also Hevia are two of the counters that actively traded in the furniture sector. Okay, and also today we are seeing glove sector to move as well. And as for the technology side, okay, if we look at some of the technology counters like Greytech, we are seeing Greytech has traded the previous support, previous low area around here, and we are seeing some of the buying support happening. Okay, similar with DNO. Okay, DNO has been trading at the support area of 3 ringgit 36 cents, and we are seeing some of the bullish reversal signal. Buying interest has been coming in. Okay, yeah. So if let's say for Penta wise, Penta is even better. We are seeing a small consolidation after a strong rally. The selling has been weak with a diminishing trading volume. Hence, the upside is pretty much good to retest the 4 ringgit resistance area. Okay, so for some of these technology counters, they are expected to be benefited from a weaker ringgit as well. Okay, so since we are talking about the for technology counters, and Afik is asking about Genitech. Okay, if we look at Genitech wise, we are seeing Genitech has been trading on a downtrend. Okay, but today, given the continuation of the rebound, we are seeing Genitech is penetrating above the downward trend line. Okay, so what we need to see on Genitech right now is we need to see it to retest the previous high at 2.72 area. Okay, and potential hopefully we see a pullback happening. Okay, and then we break, then we can call this as a turn in the upward trend for turning into an upward trend for Genitech. Okay, and Josephine is asking about Inari. Okay, unfortunately for Inari, we can see that Inari has been selling down further and testing into the resistance of 2 ringgit 40 cents to 2 ringgit 50 cents area. Okay, and at this point, we are not seeing any strong reversal signal happening. Okay, hence the selling pressure could remain quite strong at this moment, and the chances of it to retest 2 ring 40 cents, it could be there. Okay, one of the reason why the selling pressure on Inari is heavier compared to other technology related counters is because um, there comes it's because very soon we're gonna have a mid-year review of the FPM KLC components, and there are speculations that Inari might be fall out from the index. Okay, hence there might be some of the selling on these stocks ahead of the falling out from the top 30 constituents. Okay, yeah, so that is one of the reasons why Inari has been on a greater project selling project compared to others. All right. Okay, so if we look into other sectors that we are looking at, okay, banking is one that we think quite interesting. Okay, because we are expecting that the OPR rate continue to increase. Okay, although the increase of 25 basis point by the Bank Negara Malaysia recently is our expectation. Many didn't expect that Bank of Negara will increase that fast. Okay, but with the increase of the OPR, we can see the profit margin for some of the banks. It would improve rapidly. Okay, hence some of the buying interest has been coming into all these banking stocks. Okay, in anticipation that they will have a better profits as the OPR rates increase. Okay, so we can see MBSP has pulled back and supported at 200 moving average and then continue to trade higher. Okay, it is turning into a potential uptrend. Okay, as long the buy interest continue, we might see the trading to 70 cents to 76 cents area. Okay, some other bank stocks that we are looking at is like Maybank. Okay, Maybank is also trading in an upwards mood that we are seeing and kept at 91 cents resistance area. Okay, at this moment. Okay, and some of the less popular but interesting one will be like BNB. Okay, BNB has recently rebounded from the support. Okay, from the support of 2 ringgit 85 cents and then breakout above 96 cents area. Okay, so with this breakout and as long the price able to sustain above this area, that it stands a good chance to retest 3 ringgit 30 cents to 3 ringgit 20 cents to 3 ringgit 30 cents area for BNB. Okay, and this is one of the share counter in the banking stocks, which I think the outlook is pretty much attractive at this moment with a potential bottoming up formation. So, okay, especially if we look into a bigger chart wise, bigger chart structure, it might be a very big structure of double bottom that gonna happen. Okay, but of course the very first challenge that it has to test is the midpoint 3 ringgit 20 cents to 3 ringgit 30 cents area for BNB. Okay, So before we end the section today, we're gonna just take a few go through some of the counters that some us. Okay, we're gonna go through a few like MFLA. Okay, Alex is asking about MFLA, and what we are seeing from MFLA right over here is we are seeing MFLA is well supported at 58.5 cents and started to rebound from the area. Okay, and what we are seeing from MFLA, it is still trading on the ranging formation within the 10 cents range, and as it is coming near to the 70 cents area today, we are seeing some of the profit taking happening on the MFLA. Okay, and recently we also noticed that India side has restricted their export ban on the wheat, that it affects very little to our wheat supply. Okay, but eventually it will increase some of the pressure on the wheat supply globally. Okay, hence it could be good for MFLA with the potential increase in the price, and also they might able to pass the cost to the consumer. Okay, so technically wise, we are seeing is still trading on the range bound, and what it is a clear break above 69 cents to above 70 cents. Then we could see a good chance that it will trade into next ranging, which is 73 cents to 83.5 cents area for here. Okay, for MFLA. The next one will be FFB. Okay, for Farm Fresh. Okay, for Farm Fresh at this moment, um, for this moment for Farm Fresh, we do not see a very identical move or trend on Farm Fresh. Okay, if you realize that Farm Fresh closing the first day closing of 472 cents, we can use that as a good benchmark to indicate whether Farm Fresh is going more towards on an uptrend, or it is going more towards into a downtrend. And unfortunately, right now, what we are seeing on Farm Fresh is it is below the 172 cents closing. Okay, so what does it mean is um, the selling pressure could be stronger when it trades come to 172 cents. Okay, you do really want to see if there is any obvious selling pressure whenever it comes to 172 cents area. Okay, if the volume continue to build up and break above 172 cents area, we might see a strong surge, try to indicate the the upward direction for Farm Fresh, and 172 cents will turn into the support area divider for Farm Fresh. Okay, yeah, enjoyment. Okay, so this is one of the level that you might want to look at it closely. For Michael is asking TechScam and also Bonia. Okay, so these two stock has been trading on a very strong trend. TechScam has been is expected to benefit from the consumer side with the Sushi King, okay, with the economic recovery. And we are seeing TechScam has been rallying really strong, and the price has been moved very far away from the 30 days moving average. Although 30 days moving average line has been trying to catch up, but we can see it's still falling. It is still far away. Okay, for TechScam wise, I will be a little bit concerned given that the share price continue pressure higher, but the volume has been coming lower. It's telling me that the there are lesser people who willing to chase higher on these stocks, and hence I'm expecting a potential short-term retracement on tech scam these stocks. Okay. Okay, as for Bonia, we can see a very similar movement on Bonia, which is Bonia. It break out from the upward rising wedge, okay, with a strong break, and then we are seeing a dark cloud cover happening over here. Okay, so hence with this dark cloud cover, I'm expecting that Bonia might undergo some retracement and also go into sideway for in near term. Okay, for Bonia. Okay. Another one. David is asking about MHP. MHP has announced result not last week. Okay, it is a turnaround, so that's why we are seeing some of the buying interest heavier today. Okay, but uh, one thing is we need to know whether the result will it be one time thing, and also given the business nature of MHP, the trading interest will be much lesser compared to others. Okay, so at this moment, I would say MHP is still trading on a sideway movement, uh, sideway, sideway mood right over here. Okay, rather than any strong trend happening. Okay, I will be still very conservative for these stocks at this moment. Okay. And Ken is asking about GIA. GIA is one stock that we actually realized that it has quite a fair bit of the buy interest happening today. Okay. Uh, okay, for GIA, given that the we believe the upside for RGR it remains, but it might take some time before it comes. Okay, building material segment and also construction segment has been actively discussed, especially with the recent talk about the revival of MRT3, and we are also talking about to revive the HSR or the HSR. So with all these things that might come in the pipeline. Okay, some is already said they're gonna revive. The construction and also building materials, it is likely to undergo quite a bright prospect in near term. Okay, it might not be near. It might take a little bit longer. Okay, but for those who are trading into these two segments, you need to be patient uh, and also have to sit through the moment. Okay, especially we know that they are talking about the elections. The rally it might only come after the elections. This one we do not know. Okay, only God knows. Okay, but that might happen. But for those who are trading it, I would say that it is likely to stay on a range bound, and you might want to take might want to use a small portion of your position to do short-term trading, like whenever it comes to the near to the resistance, you might want to take some of the profits, and if when it comes near to the support area, and then you might want to take some off, might want to buy back. So in between, you still have another 8 to 9% to make in between while you're waiting for the move. Okay, right. And yen her. Okay. For this stock at this moment, okay, if we talk about whether there is a good to accumulate or not, one thing is we need to like really look into. We can seeing that it is trading on sideway, okay, and the 87.5 cents is like the midpoint of it. Okay, if you are talking about to accumulate, okay, we can see with all this stronger volume, with the higher volume, it usually happens somewhere around 87.5 cents. Okay, so this is the area that people has been accumulating. All the volume has been happening. So if you really want to accumulate and keep it at a lower buying at a lower price, 78 cents is the support level that you might want to look into. Okay, and for these stocks, we can see the trading volume should be very little. The bid ask, it could be quite wide. Hence, you have to be really patient if you are dealing with these stocks. Yeah. Okay. So I'm gonna take another two more. Okay. One is from Gucci. Okay, about KB. Okay, for KB wise, we can see that um, structure the structure for the KB is actually quite encouraging, whereby we can see the bullish engulfing is happening over here by the end of last year, and we are seeing the stocks to trade slowly in and on an upward trend for KB. Okay, although we are seeing some of the selling pressure coming in, the buying momentum has slowed down, but we are seeing the supports has come in, especially when it trade near to the trend line over here. Okay, so for KB wise, the at this moment, what we are seeing that it is likely to continue to resist. It is trading at the resistance of this area 43.5 cents to 45 cents area. That's why the buying has been slowed down. Okay, but I think you want to continue to hold on to these stocks and look for the breakout above this area, and it will be fruitful once it break out where we can easily see it's above 50 cents to 54 to 58 cents area, or even 60 cents for KB. Okay, technically it is very encouraging for KB. Okay. As for Syntax wise, we are seeing Syntax is trading lower. Okay, and especially recently after it break below the 3.92 cent support levels, the share price has been selling down. And the next support that we are looking at is somewhere around 2 ringgit 90 cents to 3 ringgit 15 cents for Syntax. Okay, so at this moment, for those who wish to buy on Syntax, okay, you might want to wait a little bit and look into this area 2 ringgit 90 cents to 2 ringgit 50 cents as the immediate support level for buying to accumulate. Okay, for a midterm trading. Okay, so that will be all for our section today. So to recap, what we have been talking about is okay. Uh, for this week, we expect the market to continue on a cautious tone. Okay, but we can take advantage of a weaker ringgit where the trading interest might come into the three export sectors like furniture, glove, and also technology. Okay, and also the recovery team might slow down a bit, but that remains one of the major trading sectors and thematic that everyone is looking at it, because recovery in the economy, the reopening of uh, the economy, the tourism, all these things, it would support our economy, and the benefited sectors will able to perform better than others. Okay, yeah. So for those who are trading this week, good luck. And I believe as long you continue to put in the efforts and trade cautiously, there are still opportunities to and also money to be made from the markets. All right. Okay. Keep the trading horizon short. See money, take money, and cut loss decisively if it needs to. All right. Okay. So that will be the end for our section today. Thank you very much, and I wish you guys have a good week ahead. Thank you.